Good morning. It seems like a stock picker's market with the main indices being stuck in a range and individual stocks are hitting new highs. Small and mid-cap indices may extend their outperformance. We've had 2 tepid months of trading after a strong June and there are no signs yet of a convincing breakout. For the Indian markets, September may just turn out to be similar to July and August. Some sector churning is a given as investors and traders chase higher returns. Domestic economic data is expected to remain fairly robust, though some softening is not ruled out. But global market trend will continue to cast a shadow over the local markets. Today's start is likely to be cautious owing to shaky global markets. The US stocks ended lower despite an encouraging report on jobless claims amid persistent worries over the economic slowdown. Asian markets are in the red but not by much, and European stocks managed modest gains. All eyes will be on the revised US GDP data and Ben Bernanke's speech. The Nifty may cross 5,500 shortly but is likely to face resistance at higher levels. There have been some concerns over the elevated open interest position in the F&O market lately and its potential ramification on the market if the sentiments deteriorate further. Though the F&O rollover has been overall positive, the key indices are unlikely to witness a runaway rally given the risks associated with the global markets. Hence, one should act with prudence and not take undue chances, although the bias for the Indian markets will continue to be positive. Another round of SAR US macroeconomic data during the week ending the 25th of August rekindled fears of a double-dip recession in the world's largest economy and battered equity markets around the world for a second straight week, according to IIFL Global. The other news for the day is the Cabinet has approved direct taxes code bill. The food prices reduced marginally to 10.05% in the week ended 14th of August as against 10.35% in the previous week. The union government plans to reach out to the domestic chambers and business lobbies which are apprehensive about the amendments in civil nuclear liability bill cleared in the Lok Sabha. SEZ to get tax relief under the direct tax code bill. Bank gross NPAs to touch 3.5% by March 2011 as per CARE. Tata Motors is looking to raising up to $1 billion to fund its various expansion programs. Tata Power is in talks to buy a 50% stake in the power utility Intergen NV. NMTC, the country's largest iron ore mining firm, is seeking foreign partners for its proposal steel plant in Karnataka. ONGC has discovered oil in a block in the western onshore basin. The US Exim Bank has sanctioned $917 million in loan guarantee towards equipment for Reliance Power's project in Madhya Pradesh. Jet Airways is looking for equity dilution of up to 20%. Indian Bank eyes 35% growth in SME lending. Maruti has put in place an innovative program by which it is increasing the production capacity of its 4 plants located in Gurgaon and Manesar by 20%. Sun Pharma, which approached the High Court last week to be heard before any settlement was allowed between Wockhardt and its creditors on FCCB dues, demands the original FCCB terms be honoured. Moving on to the recommendations, the trading ideas are a buy on Dibis Laboratories. We advise buying the stock above levels of Rs 760 with a stop loss to be maintained at Rs 745 for a target price of Rs 790. And a buy on Power Grid. We recommend high-risk traders to buy the stock above levels of Rs 106.50 with a stop loss to be maintained at Rs 103.50 for a target price of Rs 113. The derivative strategies are long Orchid Chem's September future in the range of Rs 194 to Rs 196 for a target price of Rs 210 and the stop loss is to be placed at Rs 188. And long Emphasis September future in the range of Rs 627 to Rs 630 for a target price of Rs 652 and a stop loss is to be placed at Rs 621. Thank you and have a great day ahead.